This is London with Bitcoin Spike and VIP Trader. Guys, is late, but we're still trading. We're going to dig into the details. We're here in our headquarters in La Jolla, California. Beautiful, beautiful headquarters, La Jolla, California. And we're going to dig into the details. I've got an interesting dynamic to share with VIP. I hope you're all doing well. We caught the move in the back today. Let's dig into the charts. You guys want to go on the charts? Look at the 4 hourly. Now, in terms of the exact move that occurred, I want everyone to be familiar with, and you are if you're a VIP. And by the way, if you're a VIP and you're not in the back with Slack, guys, you're missing trades. Bottom line, we are catching trades and you are missing trades. Bottom line, I do not know of another group that is as well plugged in or even slightly remotely as plugged in as we are in VIP. Bottom line. And we do a lot of research to try and find those groups. There's nobody out there, guys. You're doing a great job at VIP. Now, in terms of the details, we are towards the top of this rising wedge, catchy area. What did we do? We broke through the level of support, down and out for a pullback. Boom. High percentage probability for a pullback. If you're in VIP, you know that. Absolutely. A pull back to prior support, confirm as resistance. We're looking at a potential flag formation. And yes, this is a catchy zone. Now, the good news is the following. Please pay attention. Let's rewind. I have a specific demonstrated rounded bottom feature here on the daily. This is the important, and just please listen up. This is the important aspect that I want to bring to you tonight. Some of you may have missed the bottom. You may be anxious to over deploy capital now. I want you to rewind just a minute, okay? Focus in and settle in to the technicals that I'm going to deliver right now. In the form of the rounded bottom, this is so well demonstrated, and I have 3 specific as we fight along the top of that apex. Very, very, very catchy area in the top of the apex, any rising wedge. You guys know that. Very catchy. Looking at this internal, let's look at this primary. This primary internal. Let me see if I can turn this blue. There we go. You see the specific internal line here of the rounded bottom. You see that internal framework is really well pronounced, okay? So I have given you here, in terms of the technicals, not only that internal line, but the secondary line and a tertiary line here, just to further define that rounded bottom. Now, this is highly relevant for the following reasons. Let's pay attention. We do have a noted defect here on the left-hand side, but we do have a really nice, if you'll just follow the specific external and internal lines here, we have the majority of this pattern being fulfilled, okay? So we're gonna look at this rounded bottom, and why am I interested in the rounded bottom? The following, we've been discussing the specific bump and run with the lead in. The lead in is the consolidation, okay, that leads into the bump for the run. This is the daily. Now, you know that we need a breakout, and I have extended this line on the weekly. We're already out, by the way, but I've extended this line on the daily to give us more room, okay? Giving us more room before technically, let's say this, and I'm not going to tell you when to get in, when to get out. You guys know at the back, we're trading, and if you're not seeing when to get in and when to get out, you're not at the back, guys. You're probably not trading. It's pretty clear cut in the back. We're doing well, bottom line. Now, in terms of the details, let's look at this. Technically speaking, on a rounded bottom, the good news is, and this is nice, the good news is we would be technically indicated for an entry once we, pay attention, once we fulfill price up and over this resistance. Boom. So that's nice. We have, if you're planning to trade this long, you have a little bit of time to wait. We're at the top of a rising wedge. You can relax just a moment. And looking at the second requirement, if we call that the first requirement to really go long, we can talk about upside targets, guys. We can talk about those, and we will here in a second. But in terms of the specifics, looking at the first level or first threshold for breakout, let's dig into the details on what's the second threshold for breakout. It's that, so if we're looking at first threshold, clearing this preceding resistance, you guys got it right in there. The second threshold for breakout is going to be in this area with the specific lead in on that bump and run. Boom. So in the bump and run, the easiest way to think about it, it's a reverse cup and handle. Do you guys see the specific handle? Do you see the cup? Yes, the specific handle, and cup. These are great patterns to trade, but that is our second threshold on the daily time frame. Hit 1, hit 2. So we're looking at getting up over this level of resistance as well. So guys, if you are in a position, I'm gonna go ahead and put 10x right here. I do this every now and then when we've got a key feature in terms of a level of resistance to conquer. And sometimes, I'll tell you, sometimes you're already in a great trade. A lot of you are. This 10x helps you know where the traders are focused. Where are we looking? Where did the TA authorities say you enter the trade there? Now, Bitcoin can be trappy, particularly in a bear market. We have completion scenarios to the upside that include fractional completions, probabilities. Will we achieve, and let's look into this, will we achieve a full amplitude move of the rounded bottom? That'd be about a 50% move to the upside. I'll measure that, but that would be about a 50% move to the upside. That's a nice amplitude move, boom, boom, stacking that along the top. And you would see that expectation is going to be mitigated somewhat, and pay attention, please. And I want to focus on this rounded bottom because we haven't focused on it much, but yes, 50% would be that full amplitude move. There's a greater probability that we would achieve that 50%. The 50% would be about a 25% move. And just understand the following. This is, I'll just tell you, it doesn't take much to get the traders really excited. You hear one video or someone saying it's gonna be going up, all of a sudden you can't wait. People literally want to go out and borrow money from a bank to start to invest. That's the wrong way. If you're just getting involved in investing, I always tell people, just personally, off the cuff, guys, former hedge fund owner, private, non-SEC, not financial advice, Duke University, Harvard Business School, you guys know the spiel, but what I'm gonna say is I tell people, just throw 1/10 of what you want to invest in whatever you're looking at right now, because someone has probably sold you pretty hard on it, okay? It could be CNBC, Bloomberg, it could be a friend who's already probably made money, etc., but they've been sold hard by someone as well. Just lightly deal with something when you're first getting involved in, and see whether or not, is the bottom line, see whether or not at all points in time, can you get a better Guys, can you get a better entry in the market? Can you get a discount from where you're trying to enter right now? If you haven't done the full evaluation, guys, go 1/10. That's the way that I see it work out the best. Not financial advice. You guys do what you want to. Go to your broker, get your financial advice. If you've done your full discount analysis and you're certain that you cannot get a better entry in the market at all, you've gone through your technicals, you've gone through your fundamentals, you've gone through the overall breadth of the market analysis, etc., then go for it. You guys do what you need to do. But I'm just going to tell you, a lot of times you will be given a bit of a discount, even if it was just like today. And this is important, guys. This is very important as we talk about entering into the market. And the goal of this specific video is to let you know we have some time here. We have an external, that second threshold to get out, up, and over. We have that primary threshold on that specific rounded bottom. Guys, you've got a little bit of time. You say, well, I just don't want to miss it. I mean, look at this. That would be up to 33,000. Guys, we're at about 30K right now, right? We're 30,200. So yeah, you would be sacrificing about a 10% potential move to kind of put on the cruise control for a minute. Kind of watch price. If you have a lower position, beautifully well done. You guys know, let your profits run. Cut your losses short and let your profits run. That's New York Institute of Finance. And as we would dig into this hype element, you guys know I guess the exciting part is that we did pick up on our fire and ice. I just wanted to bring this on that 4 hourly. What's been consistent? You guys know this. The 4 hourly has been like, well, how do we explain it, guys? The best rationale to go through in terms of why fire and ice has been so prominent on the 4 hourly here, the green byline, bam, consistently throughout this move to the upside. As we are going to the upside, it just represents that 4 hourly. The green byline and the fire sale have just represented the opportunity to buy the dip. That's the bottom line. In an uptrend, you buy the dip, right? In a downtrend, you sell the bounces. That's the idea. So I'm excited to bring you guys this information in terms of that rounded bottom. I believe it's critical for us to not take just a wait and see approach, but do you have, and this is the big question that I'll finish with here as we roll into the week here, and I hope you guys are doing well. Do you have an additional reserve amount of capital or an additional entry here for the breakout? Okay, now if you already have your maxed entry from below and you're looking for that breakout, you're gonna let it ride, that's great. I assume that would be what we would call a pocket trade, okay? You've got that in the pocket, okay? Then you're gonna do your side trades, okay? In terms of this chart though, I really like to pose the question rather to you in terms of, do you have some reserve capital to implement here? Okay, and normally we're thinking about reserve capital lower. Technically speaking, per the rounded bottom, this would be an entry spot here, breaking through that resistance up and over. However, that second threshold line here, this would be, I'm gonna tell you, this would be the second hurdle to clear, and I do have 10x here. So if you're looking at increasing your position, I'll just tell you that technically speaking, this would be a great area that is technically indicated that the bulls in the market are watching. So if you've got some additional cash to deploy, you want to get out, let's say, of this rising wedge feature, because I'm going to tell you, and you know it, but bulls are not excited about rising wedges, without a doubt. I appreciate the time you guys are spending here tonight, and I really did want to bring something a little unique to you, okay, in terms of that rounded bottom feature with the double hurdle. You guys got that, but that rounded bottom feature with that double hurdle. Yeah, and this is just not bull country right here. We're trying to turn it into a bullish effect with a specific bull flag along the top of this danger zone, that apex of the rising wedge. We'll trade it. We traded it today in the back. Don't ever be afraid of a pattern or the market, but as we look into it, the real sweet spot is going to be up and out of that secondary hurdle, that bump and run, clearing also the specifics in terms of that preceding pivot to the left on that rounded formation, which again, you'll see very well. I'd say very well, what would say, just expressed through the entirety of this internal and external diagram that I wanted to bring you tonight. Hope you're all doing well. It's a little bit late in California, but I was like, I'm gonna get the VIP something. I know that you guys like your good technicals. I know you like your fire and ice. What's up? Yes, okay. If you're a VIP and you're not plugged in the back, I'm gonna tell you, you're missing trades. I don't like that, guys. If you're missing trades and you're VIP, those two things don't match up. That doesn't work, guys. So this is London, former hedge fund owner, private non-SEC, now financial advice, Duke University, Harvard Business School. Hope you guys are doing well. We're looking forward to a great week. And it seems a little bit quiet. The overall markets seem a little bit heavy, don't they? It's like, we should be moving right now. We should be moving. It's a big decision for the markets to traject to the upside. Okay, it's a big, in my eyes, right, in my estimation right now, it's just a big, it's a big thing if we decide to cut loose to the upside. We would be back, we'd be essentially, if we do it the right way on the overall broader equities, we'd be out of kind of bear turf, bear country. So it's a big deal, and we've been sideways for a while. Look at your S&P, look at your NASDAQ, guys. We've been sideways for a long time. So if we can break, we'll break. You do have the information now in terms of the break on Bitcoin. 10% is, I'd say, reasonable if you're looking for a primary entry. Technically, it would be oriented in this area, and I will further explore the details in terms of what additional confirmations would be needed once and if and when we can get up and over that secondary hurdle. You guys got it. This is London with Bitcoin Spike and VIP Trader. Hope you're doing well. We'll talk to you soon. Take care. Bye-bye.